Hello everyone, welcome to the Ichimoku.co daily markets review for the trading day ending Monday, April 13th. Firstly to the S&P 500 today, and we saw price action rejected from above the round number 2100. The prior day's trading, the buyers took control as the market traded above 2093 resistance. And then with that control came the breach, and a bullish breach of the 2100 level. The buyers failed to follow through, with the sellers coming into the market today, closing down towards the low, forming a black body candle, so some momentum for the sellers. And the sellers have taken control, shown some commitment, and the buyers have actually lost commitment above the 2100 level. The sellers have tested around the 2093 level, previous resistance, 2 candles ago, and now acting as support within a small zone. There is a possibility, with the sellers closing this market with strong control, that we could see a change of trend to the downside. This candle actually has a higher high and a higher low, so no change of trend technically, but a very good likelihood that we could see that. And then the market testing down to the top of the highlighted zone around 2079. Just below there we have a confluence of strong support, with the Tenkan Sen indicator, the Kijun Sen, and the top of the Ichimoku cloud trading roughly about the 2077 region. So we're likely to find very strong support within that area. So if there is any sell-off, it's likely to be very short-lived. Looking to the Fibonacci extension technique, and following the bullish breakout up above the 61.8% level, today we saw the market testing above the 78.6% level with this very strong rejection, and it does suggest that there is a very good likelihood of a change of trend occurring in the first time frame. So we'll be looking for confirmation of that, with the market making a lower high and a lower low. Moving next to our bands here with the S&P, and for the prior day's trading we actually saw the market breaking out in a bullish manner up above the upper band, and it suggested that we may have had a return to that strong bullish bias that we saw previously in this market. The problem here was the lack of follow through, and with the sellers coming back into the market and closing within the bands, it does suggest that a lot of that strength that we saw perhaps beginning is not there in the market. And there's a good likelihood that if we do see this change of trend occur that's expected in that first time frame, there's a good possibility of the market finding support around the middle of the bands, which trades at 2081 at the moment. Just taking our research a little broader here, and examining the relationship between the Vanguard All-World Index without the US stocks included compared to the S&P 500. So looking at the relative strength comparative down here on the subchart on the left hand side, and we can see that the world index had been strongly outperforming the overall market since late March, and we see that that market had been actually trading up above each of the Ichimoku indicators, so it was quite strong. But some added benefit here as far as out trading the overall S&P 500. The comparative was to the SPY ETF. Also comparing the bonds to the overall market in general, and here we see a relatively weak market in terms of Ichimoku. We're looking at the TLT ETF, 20 plus year Treasury bond fund, and we saw a bearish breakout down below the Ichimoku cloud. The market bearish in the short-term time frame by trading down below the Tenkan Sen, finding some resistance at the Ichimoku cloud as well as the Tenkan Sen indicator at the top of the Ichimoku cloud, and quite recently underperforming the S&P by trading down below that lower band. Looking at the Vanguard REITF ETF fund, and that's the basically representing the price, sorry, the property market in the US, and here we see a bearish market trading below the Ichimoku cloud and each of the Ichimoku indicators, supported by the Chica span at the moment, and we see the strong underperformance against the SPY here, with the market trading down outside of the band. So it certainly does look as though the overall world equities markets without the US markets included, is the stronger market at the moment, followed by the SPY, the S&P 500. And then we're seeing a strong underperformance at the moment on the daily charts from the property fund. Comparing the gold ETF, and that is an asset class that we can trade here through this ETF. GLD is the code, and we see a negative market trading down below the Ichimoku cloud, hovering around that Tenkan-sen indicator, quite indecisive at the moment, with the market trading above and then below and above and below. If we do see the market continue to sell off, likely support around the Kijun-sen around 113, but the ETF was out trading the SPY ETF for a period of time, but has now come back to an equal performance with the SPY over the last couple of trading days, so not underperforming nor outperforming. Next, moving to the sector ETFs, and the energy sector is one that has seen the market trade relatively strongly over the past week or so. Still trading up above the upper band, suggesting that we have a relative outperformance against the overall S&P 500. On the Ichimoku chart, trading up above the Ichimoku cloud and the other indicators, highlighting a strong uptrend in all three timeframes. But for today's candle, we've seen the sellers coming into this market quite strongly. A large black body candle, a bearish engulfing candle, engulfing the body of the previous candle, and suggesting that we certainly could see this market continue to trade lower over the next few days. In terms of the bands here, trading up above the upper band, and we saw the breakout and some strong follow through, looking to the upper band around 78.94, or roughly the $80 level, $79 level, to hold as strong support if we do see continued selling. Next to the technology sector, and a market that's trapped within the Ichimoku cloud, so no clear direction in the longer term time frame. And on today's candle, strong rejection from just above the cloud, with the sellers taking control. No change of trend in that first term time frame, and a good possibility of that occurring with, as I've said, that strong rejection and the sellers in control. Strongly underperforming the overall equities market here, with the ETF trading down below that lower band, and suggesting that this certainly isn't a sector that we would be favouring at the moment. Next to the consumer discretionary ETF, XLY is the code, and very strong resistance overhead for this market, extending roughly from about the 76.90 level up to about 77.14 or so. Some strong price rejection coming here in the market today, a black body candle, good potential for the sell-off to continue with the sellers taking control, but likely to find strong support around the confluence of the Kijun-sen and the Tenkan-sen indicator about the 75.69 level. No terribly strong outperformance against the overall market, but if we look at volatility here, we've seen a cyclical low in volatility for the last few weeks, and we're likely to see volatility pick up eventually, and that will mean, if we do see that, that we'll either see perhaps a breakout up above this resistance, and we could then see development of uptrending price action, or perhaps a breach down below the Kijun-sen indicator and Tenkan-sen indicator in the market, perhaps trading to lower levels. So there's no hint as to direction at the moment, but certainly this sector is looking primed for some trending action in either direction. Moving next to some stocks and looking at Halliburton first, HAL is the code, and we've seen a fairly strong breakout up above the Ichimoku cloud over the last 3 or 4 weeks or so. Strong follow through with the Tenkan-sen indicator providing some strong support, although we didn't see that about a week or so ago. With today's candle selling coming in, a large black body candle, and we're looking to the Tenkan-sen trading around the $45 level to hold a support. The important thing here, however, is the strong outperformance against the S&P 500 over that time period, and the volatility ticking up off the cyclical lows that we've seen recently. And it does suggest that if the market can find support around the Tenkan-sen and bounce off there, we're likely to see further continuation of that trend to the upside. But a lot will probably depend on how HAL, the code, responds to the potential support around the Tenkan-sen indicator. Moving next to Lows, LOW is the code, and we've seen this market going sideways for quite some time, forming a congestion area. Still trading up above the Ichimoku cloud, however. With today's trading, however, we've seen a strong bearish breakout down below the Kijun-sen indicator, and that's the first time in some time that we've seen that occur. Now, we have seen it previously, and what we saw previously was the lack of strong follow-through after that, confirming the breakout. So if we are going to see this market continue to lower levels, we'd like to see continuation of that bearishness following the breakout. So the sellers in control, and another strong candle to the downside would suggest that we could see continued downside. The problem here for the sellers is going to be the strong support around the top of the Ichimoku cloud, about the 72.85 level. But looking at the performance against the overall market, we've seen the market just start to perform under that first band level, and it's suggesting that we are seeing a change of the performance from outperformance, and then neither outperformance nor underperformance over the prior couple of weeks to some underperformance at the moment. And if we do see the continuation of that trend to the downside, we certainly could see some continued strong underperformance with this stock. Moving next to Apple, AAPL is the code. And we see the market flirting with the top of the Ichimoku cloud. For the past 3 or 4 days, the market has found strong support around the Kijun-sen and the Tenkan-sen indicator, testing down below there, and the buyers coming in each time. That will be an important level moving forward, and at the moment roughly about the 125.84 to 125.60 level. If we see a strong bearish breakout down below there, we certainly could see Apple trade to lower levels. Looking at the relative performance, no strong underperformance over the past couple of weeks, and performance on par with the overall market, and that's really in strong contrast to the very strong outperformance that we saw prior, as the market tested to the strong highs around the 132 level. Looking over here to the bands, and here previously we saw the strong bullish breakout up above the upper band, but the lack of follow through confirming. We see the bands squeezing together again, and that highlights the cyclical low that we're seeing the market find in volatility, and it does suggest that Apple is certainly getting set up for a move either to the upside or to the downside, and the bands here will be a good guide. And either we're looking for a bullish breakout above the upper band and then strong bullish follow through, or a bearish breakout below the lower band and then strong bearish follow through.